Then we go to the next section. So the next section are the modifications in auditor's report. So what we've seen so far earlier is what we call the standard auditor's report. So meaning those where we issued unmodified opinion and there's also no modification in any portion of the auditor's report. So in the standard auditor's report, so we issue unmodified or unqualified opinion without explanatory or additional paragraphs. So somehow nowadays, so because of the recent update in the auditor's report, so the auditor's report has ceased to become very standard in format, unlike before the update in 2016. No, so what I mean is because of the inclusion of the key audit matters, so the independent auditor's report would now vary from client to client. So especially if the client is a listed entity. So because there will be an inclusion of key audit matter, so which will somehow be flexible. So because the information there will really depend on the matters that the auditor encounter in each of their client. In the past, when the auditor is not yet reporting on key audit matter paragraph, so the structure of the standard auditor's report would be very similar for all clients, where the auditor issues an independent auditor's report containing unmodified or unqualified opinion without explanatory paragraph. So meaning the auditor's report that is unmodified, containing unmodified opinion for one client will look like very much the same to another client where the auditor also issued an unmodified or unqualified opinion. Okay. However, nowadays, because of the inclusion of key audit matter paragraph, even if the auditor issues unmodified or unqualified opinion, the content of the auditor's report from one client to another could be different or could vary. So because of the key audit matter paragraph. Okay. So and then we have modified report with unmodified opinion. So in this case, modified report with unmodified opinion, this is the case where we issue unmodified opinion but we include explanatory paragraph. So explanatory paragraph are also known as additional paragraphs to the auditor's report include the emphasis of matter paragraph and other matter paragraph. Okay, so those are additional explanatory paragraph we include in our auditor's report, and yet we still issue an unmodified or unqualified opinion. So the financial statements are still fairly stated, but we want to highlight information, okay, additional information to the users of financial statements. And then finally, the last one, we have the modified opinion. So modified opinion when we issue qualified, adverse, or when we disclaim our opinion. So that is considered modified opinion. So now let us discuss the additional paragraphs to the auditor's report. So for this part, our reference is PSA 706, emphasis of matter paragraphs and other matter paragraphs in the independent auditor's report. So again, we have two types of additional paragraphs or explanatory paragraphs. So the first one is the emphasis of matter paragraph. So which we include in the auditor's report when we refer to a matter, highlight appropriately presented or already disclosed in the financial statements that is fundamental or important to the user's understanding of the financial statements. So in contrast, the other matter paragraph, another type of additional paragraph to the auditor's report, is a paragraph that we include that refers to matter other than those presented or disclosed in the financial statement, but relevant to the user's understanding of the audit, the auditor's responsibilities, or the auditor's report. Now, as you can see, the difference or the main difference is that in emphasis of matter paragraph, we include an emphasis of matter for items already disclosed in the financial statements. So this information uh, are, are, are those that affect the company's financial statements. Okay? So whereas the other matter paragraph, so these are the information that are not disclosed or not included in the financial statements, but they affect the conduct of our audit or our responsibility or the auditor's report. So simply stated, when we use emphasis of matter for items that have something to do with the client's operations, that have something to do with the client's information. Okay? So whereas other matter, we use this paragraph to disclose information that affects the conduct of our audit. So something about the auditor. So emphasis of matter, something about the client's FS, and other matter paragraph, something that is related to the auditor. So that's the main distinction of these two paragraphs. But of course, we will discuss them in detail. So starting with emphasis of matter paragraph. So in emphasis of matter paragraph, so remember, this additional paragraph would not result into modification of our opinion. So our opinion is still unmodified or unqualified. Okay? And then the information that we include is not determined to be key audit matter. So items that are different or distinct, no, from the information that we have already reported in key audit matter. So we include it within a separate section of the audit report. And we include it in the paragraph, a clear reference to the matter being emphasized and to where relevant disclosures it can be found in the financial statement. So meaning to say, we will highlight the note disclosure, so the note number where the information is further discussed. And finally, we emphasize that our opinion is not modified because of the addition of emphasis matter paragraph. Now, here are the examples where we use emphasis of matter paragraph. So remember, when we say emphasis of matter paragraph, these are the important information related to the client's financial statements. So for example, uncertainty relating to future outcome of an exceptional litigation or regulatory action. So significant subsequent event that occurred between the date of the financial statements and the date of the auditor's report, and we want to highlight it in our audit report, then we add emphasis of matter paragraph. So we also include emphasis of matter paragraph when the client adopted a new accounting standard when permitted. So, but it's not yet effective. For example, there's a new standard. So let's say standard on insurance. It's not yet effective. So let's say the client will release its financial statements December 31, 2021. So the new standard will apply starting 2022, and yet the client already applied it in their 2021 financial statements. So we need to highlight that in our auditor's report and refer to the note where the client discussed the impact of adopting the new standard even when it is not yet effective but already permitted. So another thing is a major catastrophe, so that has occurred or continue to have a significant effect on the client's financial statements. So we want to highlight that in our report. Then we include an emphasis of matter paragraph. Okay? So next, we have EOM as required by other PSAs. No? So like for example, when the financial reporting framework prescribed by law or regulation is unacceptable. No? Like for example, so let's say in a certain jurisdiction, the central bank there require the entity to use a financial reporting framework. So that is different from the acceptable reporting framework. So that should be discussed in the emphasis of matter paragraph. Or to alert the users of financial statements are prepared, so using a special purpose framework, so instead of the general purpose framework. And finally, when facts become known to the auditor after the audit report and the auditor provided a new or amended audit report, so we also include that information in our EOM or emphasis of matter paragraph. So this is an example. So we draw the attention of the users to note X, the financial statement, so which describes the uncertainty, so related to the outcome of the lawsuit, so filed against the client, no, the company, by another company. So our opinion is not qualified in respect of this matter. So we based on our judgment, no, we believe that this litigation is an important information in the user's understanding of the FS. And since the effect of the litigation, let's say, is properly recognized in the financial statements, properly disclosed in the financial statements, then no need to modify our opinion. So the financial statements at the end of the day is still fairly stated. But we believe that this information, this litigation information, is very important in the understanding of the users. So that is why we want to draw the attention of the users in this information although our opinion is still unmodified. So therefore, we will add an explanatory paragraph in the form of emphasis of matter paragraph. Okay, so that's the purpose of EOM or emphasis of matter paragraph. Now next, we examine situation where other matter paragraph is necessary. So remember when we say emphasis of matter paragraph, something about the client, like litigation or adoption of a standard, early adoption of standard. So those things are where we use emphasis of matter paragraph. But other matter paragraph, so these are the situation where we use it. So these are relevant to the user's understanding of the audit, our responsibilities related to the auditor's report, or when we report to more than one set of financial statements, or when we want to restrict the distribution for the use of our audit report. Like for example, let's say we are auditing the current financial statements of the client, but the previous financial statements, last year financial statements, are audited by another auditor. So, but in the current financial statements, the information audited by another auditor will be included as a comparative information. Okay, so therefore, we want to highlight to the users that we were not the one who audit the prior year figures or the prior financial statements of the client where we are reporting in the current year. So we will put other matter paragraph. Okay, because the information that we want to highlight is not something about the financial statements of the client, but the conduct of the audit. Okay, our responsibilities as auditor or about our auditor's report. In that case, what we use is other matter paragraph. So again, if we are talking about information related to the client or their financial statement, we use EOM or emphasis of matter. But if we are talking about the conduct of our audit, we want to emphasize an information related to the conduct of the audit, then we use other matter paragraph. So like for example, in case, so other matter paragraph. So the financial statements of prior year were audited by another auditor who issued an unqualified report on April 10, 20X1. Okay? Now the next issue is where do we put the emphasis of matter paragraph and the other matter paragraph in our auditor's report. Now for emphasis of matter paragraph, we normally place it in the paragraph immediately following the basis for opinion section. Now, if there is a key audit matter paragraph, so we can present it either before or after the key audit matter section. For other matter paragraph, we put it where the other matter paragraph is related. Now, like for example, if it's related to the auditor's responsibility, then we put the other matter paragraph. So after the auditor's responsibility paragraph. Okay, or if the other matter paragraph is related to our other reporting responsibilities, then we put it after our other reporting responsibilities. So next part of our discussion will be modified opinions. So on this part, our relevant references are PSA 705. So modifications to the opinion in the independent auditor's report. Well, we have three types of modified opinion. So we have qualified opinion, adverse opinion, and disclaimer of opinion. So actually, disclaimer of opinion is not giving an opinion. So therefore, technically speaking, so qualified opinion and adverse opinion are the types of modified opinion, and disclaimer opinion is the absence of opinion. So this is the part where we do not give our opinion. So we issue qualified opinion when we conclude that we cannot provide unmodified or unqualified opinion. However, the effect of any misstatement or our inability to obtain sufficient and appropriate evidence are considered material but not pervasive. We issue adverse opinion when the effect of misstatement is both material and pervasive to the financial statement. So because if it's only material but not pervasive, then we only issue qualified opinion. And finally, for disclaimer of opinion, we express this when the possible effect of the inability to obtain sufficient and appropriate evidence is both material and pervasive. Okay? Now, take note that when there is an inability to obtain sufficient and appropriate evidence, the applicable opinion is not only disclaimer. We can also issue qualified if the possible effect of the inability to obtain sufficient and appropriate evidence is only material but not pervasive. So in short, we issue qualified opinion under two circumstances. So for misstatements or inability to obtain sufficient and appropriate evidence, but the effect is material and not pervasive. So we issue adverse opinion if there's a misstatement and the effect is both material and pervasive. And for disclaimer of opinion, we issue this when our inability to obtain evidence would be both considered material and pervasive. So also, we issue disclaimer of opinion when there are multiple uncertainties. So, and therefore, we cannot express an opinion on the fairness of the financial statements because of those uncertainties. So, to summarize, so we have the reason and the degree of pervasiveness that would influence the type of modified opinion that we will provide. So, if the reason is misstatement and the effect is material but not pervasive, so we issue qualified opinion. Okay? If the reason is misstatement and the degree of pervasiveness is both material and pervasive, then we issue adverse opinion. If the reason is inability to obtain evidence and the possible effect is material but not pervasive, we issue qualified opinion. And if the reason is inability to obtain evidence and the possible effect is both material and pervasive, then we issue disclaimer of opinion or we disclaim our opinion. So the question therefore, how can we determine whether the effect is only material and not pervasive or the effect is both material and pervasive? Now, pervasiveness will ultimately depend on the auditor's judgment. So sadly, there's no clear-cut threshold, no? So when we consider matter as only material but not pervasive, or the matter is material and pervasive. So however, we have guidance. So here in our discussion. So a matter is considered pervasive if, in the auditor's judgment, it's not just confined not to specific elements, accounts, or items in the financial statements, but it affects a multitude of line items or element of financial statements. So let's say the misstatement is only confined to a certain account or to a certain transaction. Now, like for example, a certain expense account or certain income account. So therefore, it only affects specific items in the financial statement. Then we can conclude that the information or the effect is only material. Let's say, for example, that's considered a significant account, so material but not pervasive. Okay. However, if it already affects multiple accounts, like for example, the client failure to consolidate the financial statements of its subsidiary. So in that case, the affected line item is not only a specific account or transaction in the financial statements, but multitude of accounts and items in the financial statements. In that case, we can judge that the impact is not only material but also pervasive. Okay? But it's also possible that the misstatement is confined in a specific item and it consists a substantial portion or proportion of the financial statement. Okay, so let's say the misstatement affects inventory. However, inventory is, let's say, 85% of the client's current asset. Okay, so in that case, even though it's only confined in a specific item, but the proportion of that account not to the total current asset of the client is very, very significant. In that case, we can still conclude that the impact is not only material, but also pervasive. Okay? So in relation to disclosures, so pervasive is considered, or the misstatement is considered pervasive if it is fundamental to the understanding of the users of the financial statements. So this is how we evaluate the pervasiveness of the matter, so related to the type of modified opinion that we will issue. So let's discuss the modified opinion one by one. So starting with qualified opinion. Now, when we issue qualified opinion, we strictly use the except for praise. Now, we cannot use softer praise, like for example, because of the matter or due to the matter discussed here. Now we have to express except for this item. So meaning the financial statements are still fairly stated except for the effect or possible effect of the cost of our modification. So now take note if the reason is due to material misstatement. So we will state that the financial statements are still fairly stated except for the effect of the matter discussed or described in our basis for conclusion paragraph. Okay? Now, on the other hand, if the effect is due to inability to obtain sufficient and appropriate evidence, our wording, instead of except for the effect, we will use except for the possible effect. So notice the difference. So when we use except for the effect, so that is due to misstatement. But if we use except for the possible effect, so that reason or the reason of modification or qualification is because of the inability to obtain sufficient and appropriate evidence. Okay? So what will be the impact on the other paragraphs or section of the auditor's report? We will also change the basis for opinion paragraph. So to state that we believe that the audit evidence that we have obtained is sufficient and appropriate to provide a basis for our qualified audit opinion. Now, instead of as a basis for our audit opinion only. Okay? And we also discussed in the basis for opinion paragraph the reason why we modified our opinion. So this is an example of qualified opinion. So in the first paragraph, it's still the same with standard auditor's report. But in this case, in the second paragraph, so we mention in our opinion, except for the effects of the matter described in the basis for qualified opinion section of our report, so the financial statements are fairly presented or present fairly in all material aspects, the financial position of the company, financial performance, and cash flows of the company for the period then ended. So in this case, we use except for praise. So to signify our qualified opinion. So in our basis for qualified opinion, so we discussed the reason for our modification. If we can quantify the reason why we qualify our opinion, so we have to include that also in our basis for qualified opinion. So like for example in this case, so the company's inventories are carried in the statement of financial position at certain amount, let's say 1 million. So management has not stated the inventories at LCNRB but has stated them at cost, which constitute a departure from PFRS. So the company's record indicate that had the management stated the inventory to LCNRB, the amount of, let's say, 500,000 or 300,000 would have been required to be written down. So because the client did not effect that adjustment, so therefore we are qualifying our opinion with respect to inventory account. Okay? And then in the last part, we mentioned here that we believe that the evidence that we have obtained is sufficient and appropriate to provide as a basis of our qualified opinion. Okay? So those are the sections of the auditor's report that will be affected if we issue qualified opinion. So the next one for adverse opinion, unlike in qualified opinion, so qualified opinion is less harsh compared to adverse opinion. So adverse opinion is more harsh compared to qualified opinion because in adverse opinion, we will mention that the financial statements are not fairly presented. In qualified opinion, we mention that the financial statements are still fairly presented except for the matter that we discussed in the basis for opinion paragraph. Okay? And then we also amend the basis for opinion paragraph to discuss the reason for the adverse opinion. And we mentioned also that we have obtained sufficient and appropriate evidence to provide as a basis for our adverse audit opinion. So this is an example of adverse opinion. So in this case, the first paragraph is still the same. So, but in the second paragraph, we mentioned that the financial statements do not present fairly. If that is the case, this is an example of adverse opinion. And then in the basis for opinion, we explain the reason. So we explain the reason why we issued adverse opinion. And in the last part, we mentioned that we believe that the audit evidence we obtain is sufficient and appropriate to provide a basis for our adverse opinion. Okay? All other section of the auditor's report would be the same, except for these paragraphs. So opinion paragraph and basis for adverse opinion paragraph. Then finally, when we issue disclaimer of opinion paragraph, so due to our inability to obtain sufficient and appropriate evidence, now we will state in our opinion paragraph that because of the significance of the matter described in our basis for disclaimer of opinion paragraph, so we were not able to obtain sufficient and appropriate evidence and we are not issuing any opinion. Okay? So now, what we will do is we will amend the opinion paragraph, including the first paragraph. Instead of saying that we have audited, we will mention instead we were engaged to audit only. So that's one difference, no, from the previous modified paragraph. Okay, and then we will also amend our auditor's responsibility paragraph to mention these paragraphs only. So remember, in the auditor's responsibility paragraph, we described the audit process. But the premise here in disclaimer for opinion is that we were not able to carry out those procedures. We were not able to obtain sufficient and appropriate evidence. So therefore, we will omit that description of the audit process and include only these paragraphs. So we will mention that it's our responsibility to conduct the audit of the financial statements of our client in accordance with PSA and to issue audit report. But because of the matter described in the basis for disclaimer of opinion paragraph, we were not able to obtain sufficient and appropriate audit evidence to provide as a basis for our audit opinion, and that we are independent of the company in accordance with ethical requirements that are relevant to our audit of the financial statements, and we have fulfilled our ethical responsibilities in accordance with those requirements. So these two paragraphs will replace the long auditor's responsibility paragraph that we discussed in the earlier part of this module. So here's an example of disclaimer of opinion paragraph. So in the first paragraph, there is a change. So instead of mentioning we have audited the client, we will only mention we were engaged to audit the client. That's one change already. Okay? And then in the second paragraph, we will mention that we do not express our opinion. And then in the basis for disclaimer of opinion, we will explain the reason why we disclaim our opinion, and we will not mention that we have obtained sufficient and appropriate evidence because we have not. And remember, another change would be the auditor's responsibility paragraph. So the auditor's responsibility paragraph will be replaced by the two paragraphs that we discussed in the previous slide. Okay?